Welcome to Wealth in Frames. What's the best long-term investment? Gold, stocks, or real estate? Today we go back to 1971, the year Nixon ended the gold standard, and we follow $10,000 through 54 years of history. The answer will surprise you. Let's start with the punchline. $10,000 invested in the S&P 500 in 1971, with dividends reinvested, would be worth approximately $3.8 million today. The same $10,000 in gold, around $420,000. Both sound great, but the difference is almost 10 times. How you got there, decade by decade, is where the real story is. Here's the S&P 500's journey since 1971. The path is anything but smooth. There were crashes. The dot-com bust erased 50% of value between 2000 and 2002. The 2008 financial crisis cut markets in half again. And yet, every time, stocks recovered and went higher. The line goes up, but never in a straight path. The decade-by-decade breakdown reveals why gold has such loyal fans. In the 1970s, the era of oil shocks and runaway inflation, gold gained over 1,500%. Stocks managed just 76%. Gold was the clear winner. Then the 1980s flipped completely. Stocks returned 400%. Gold lost 20%. Then the 2000s flipped again. Gold gained 281%, while stocks lost 9% across the decade. The winner rotates based on what's happening in the economy. One thing gold bulls often miss. Much of gold's gain is just keeping up with inflation. In 1971, for $120,000 in gold today is actually worth about $78,000 in real purchasing power. Gold preserves wealth well. It rarely creates it. The 5-year rolling return view is even more illuminating. At some 5-year periods, particularly the 1970s and 2000s, gold's annualized returns exceeded stocks. But across the full 54 years, stocks won by a wide margin. The lesson: your entry and exit points matter enormously for gold. For diversified stock index funds, time in the market matters most. And then there's Bitcoin, the new asset that makes everything else look slow. $10,000 invested in Bitcoin in 2015 would be worth approximately $28 million today. That same $10,000 in stocks, $48,000. In gold, $18,000. Of course, volatility cuts both ways. Bitcoin has also dropped 80% multiple times. It's a different beast entirely. Zooming out to annualized returns over 50-plus years, the S&P 500 at 10.7% per year beats gold at 7.3%, real estate at 6.1%, and inflation at 3.9%. But here's the nuance. Real estate comes with leverage, rental income, and tax advantages that raw price appreciation doesn't capture. And gold serves a specific role in a portfolio. It tends to rise when everything else falls. Thanks for watching Wealth in Frames. If you found this useful, subscribe for more data-driven finance. History doesn't repeat, but it often rhymes.